Hello, everyone, and welcome to today's No FOMO Charts, Stocks and Crypto Technical Analysis YouTube video. Today's Friday, February 28, 2025. This is a swing trading and investing technical charts YouTube channel. Welcome, everyone. We had a very volatile week, a lot of bearish selling. However, today's PCE inflation data was good, 0.3%, at least in line with expectations. So that helped us bounce today after a brutal sell-off in stocks and crypto this week. Earnings season is continuing. We have companies such as Plug Power, Target, AutoZone, Best Buy, Nordstrom, Ross, Marvell, Macy's, Broadcom, Costco, Big Bear AI, and Gap Store. Economic data, we have manufacturing PMI, non-farm employment change, services PMI, unemployment claims, average hourly earnings, non-farm employment change, unemployment rate, and Fed Chair Powell's speech. It's basically employment data. Stock news, earnings season continues with retail and other companies. President Trump plans to resume 25% tariffs on Canada and Mexico starting March 4th, 2025. He also plans to increase China tariffs up to 20%. The tariffs for China going up to 20% possibly. And then he's potentially planning to impose new 25% automobile tariffs on the EU, European Union. Today, President Trump met with Ukraine President Zelensky. However, their talks and negotiations failed after a very tense in-person meeting. Crypto news. The USA SEC issued a statement on crypto meme coins and said meme coins are not securities and are not subject to federal securities laws regarding investment laws. So meme coins are more similar to collectibles. That's what the SEC said. However, they still might be subject to fraud laws, and I'm guessing also potentially tax laws as well. SEC delays their decision on Fidelity Spot Ethereum ETF options. And last week's hack on Bybit Crypto Exchange was the largest Ethereum theft in crypto history. $1.5 billion almost stolen by a cold wallet that was hacked. So cold wallets are not safe, not as safe as we thought. And so that was a contributor to the market crash. Let's go straight to S&P 500 stocks. S&P 500, here on the monthly chart, we have price consolidation for the past couple months. We are just barely in that overbought zone, losing momentum. So it's going to take a couple months for that to play out. In the weekly chart, we already double top below 609, and we can see the cleared M double top on the price. However, the RSI is 58, so it's starting to cool off a little bit, but we had the larger double top, which is not good. We had a bearish sell-off. So on the daily chart, on a line chart, we have the resistance below 612 on this top yellow, blue line, and the support down here about 584. So essentially going sideways ever since President Trump was elected and took office. So we basically shorted down. It's like an offsides play in my opinion. We shorted down from 612 and bounced off of 585. So I went long at the end of the day today just because so many stocks were oversold. And 4 hour was oversold in the RSI. We could see that MACD histogram momentum is building very nicely, just like we want. 15-minute was oversold 2 days ago. Hourly oversold today. 4 hour oversold today. And we had some good news. So we're closing out our shorts and we're opening longs into the new month. Nasdaq QQQ ETF. Very similar. Monthly is just too overbought. Look at these wicks up here, very weak in the 530 to 535 range. The weekly chart had this double top with the wick as well at 537, and you can kind of see it. The price was just too high, so any bearish news was going to bring us down in the market. The daily chart, we shorted down to this gap fill, top of the gap fill at 497. Very nice spot, and we are in this price downtrend. So just like SPY, we're going sideways, consolidation, and we just happened to bounce off of 500 even today. I also went long QQQ. and some tech stocks. So 4-hour, you can see what was the setup. This is my entry. It's still in progress. I don't really like to talk about open positions, but to give an idea to people, why did I enter? We had some good news. We hit this support level for now, oversold on the RSI, MACD histogram building, the squeeze is building as well. The hourly chart, we already had the MACD histogram building momentum, RSI overbought. Excuse me, oversold. It was oversold in the 30-35 range. Now, a quick note about trend, price trend. Remember, price can only go in basically 3 directions for trend. It goes up, trend, it goes sideways, consolidation, trend, or it goes downtrend. So we were in a downtrend. I was long for the middle of January to the middle of February, and then I closed my longs here, and then I flipped short, was short for a whole week, closed that out, and then I opened new long positions, basically. So let's see how that plays out. Dow Jones, you can see this yellow resistance just below 450 rejected us. We had the lower high below 449 and then a sell-off. But you can see pivots do help. And particularly on this chart, we're getting stuck between the hourly pivot. We're getting rejected actually below this pivot point. Very strong resistance, which is 438, all the way to the daily chart, 438. So we basically tapped the top of that gap, 431, and then bounced back, which is totally fine. Normal price action. Now, the monthly chart, it's turning into a monthly symmetrical triangle. The weekly chart had a lower high, but we had this daily intraday 4-hour bounce, which is okay. The daily chart did not get 4-hour oversold, but I do like the setup that I'm seeing. I can basically see we broke down out of this descending triangle and we're back testing the backside of that triangle, which is 438. So just be careful. We're not going to dump again on Dow Jones back down to 432. The best case scenario I can hope for is consolidation or a higher low reversal if we have good news, because some stocks are cheaper compared to 1 month ago. So the oversold is not as clear on the Dow Jones, which is okay because more tech stocks are bouncing. Let's go to IWM. We hit the level that I was marking for last time, and even without using any indicators, we can see we broke down out of this triangle, down out of the resistance, hit the longer term support line at 211, and see if we can hold that bounce. But small caps, yes, there is actually a little bit of bullish momentum is building. Could take about a month for this to play out. So that's why I'm long in some stocks right now. Rapid fire, let's do gold. Just looking at gold with some EMAs. We lost the 20 EMA and the R1 pivot point. There was bearish momentum, but it looks like probably on a 15-minute, we had that bounce. 5-minute 15 is starting to get into the overbought range. But the hourly still in the downtrend, not looking at this death cross, but look at the price action. We're still stuck. So until the gold hourly chart reverses on me, it's still going to be a downtrend for me as a swing trader. Same thing with the 4-hour, except I like this 4-hour hammer candle, double hammer candle, see if we get a bounce on gold. Now, silver holding the trend line just barely, right? If I draw a new trend line on wicks. And the weekly, we had a lower high. 4-hour starting to get oversold. I like that. Hourly oversold as well. It could be kind of risky though, playing those bounces. So we want to see a better setup. So maybe a double bottom or, right? The first bounce, it looks like we're basically, I'll circle in blue like this. And we lost to 20, lost to 50, and see if we can bounce at the 100 basically. So again, repeat, lost to 20, lost to 50, see if we can hold and bounce the 100 EMA, at $28. Copper falling down out of bounds to the 20, see if we can hold that support above 28. And reject below 28.60. Oil, unfortunately, even though I wanted to long this because it's around the 200 EMA, but technical analysis does not always work for energy and oil and gas. So just watch out for this. Now, natural gas, however, I'm still short natural gas. Remember, and this is a smart play for me, just patting myself on the back, is making sure to get out when I see a double top, because we had such a strong rally. We had multiple rallies, even though we had a golden cross. So this price needs to cool down a little bit. And the weather is starting to get warmer. We have spring coming up in about a month. So I'm anticipating, even though this is a golden cross, maybe we'll see a little bit more selling on natural gas. Maybe we'll test $20. It might not actually get down to 17 or 18 because technically we already had that bounce. So that's why I'm just watching to see, will this bounce for me on the 15-minute or hour or 4-hour? I would like it to basically crash down a little bit more to maybe the 18 level, and that would be a nice play. But basically, if I can ask for something in the price action, because I'm short, is low, lower, high, lower, low, lower, high, get down to the 200 EMA and let things really get oversold, momentum, and then I'll close that. Okay, let's move on to crypto. Total crypto market cap, it was an extreme sell-off and capitulation. Just wild. But for me, I tried January one long, tried February one long trade. And if it's not working, either flip short or do nothing. That's my motto. I can only do 3 things in the market. I can either buy, sell, or hold, which is also like a pass. Hold or pass, right? So when I look at total crypto market cap, yes, it was extremely scary. We are in the downtrend. Okay, we are not uptrending right now. We are not consolidating sideways. We are downtrending, but oversold conditions and some of that fear kind of poked out of that Bollinger Band last night. And then we created a hammer candle. So people bought the fear, bought the deep dip. And we're entering that low RSI below 26. This is not probably the bottom of the market. So it could keep crashing. It's just I'm entering for a small bounce. That's just me, not financial advice. But we fell out of the descending triangle, which could be 15% to downside. We did not hit that target yet. We barely tapped it. So what I was looking at last night was I noticed, wait a second, we're piercing into the monthly and weekly pivot point. The daily point, pivot point is S2 support that we crashed down and we're bouncing above that. So we're holding that level. It's good. It's good. Just like tech stocks, as I was saying earlier, we're downtrending. However, starting to get oversold. Momentum's building. See if we can get a double bottom or upside down head and shoulders or a uptrend reversal. And then we'll start to see maybe some green in the market. But if we take, let's say, the last low of September 2024 to the high of January 25, and you can see we're around the 50% zone, which is about 2.75 trillion. And we almost tapped the 618 zone of 2.7. So this, I'm watching very closely. If we dump down, I might start buying in this zone, 2.5 to 2.2. I'm starting to buy right now at 2.75. That's just me though. I get kind of aggressive. It's a good lesson that if I'm too early, right, on the first kind of bounce, it's not really the end. So I was being patient, waiting for it to poke out, and then we buy. And then we try to play a bounce. It might go sideways too, which is not the best case scenario, but it's better than going down. Bitcoin, very similar analysis. We had a symmetrical triangle basically that failed, and then crypto, Bitcoin fell down the first target 13% to the downside. We basically tapped that 50% retrace exactly out of bounds, out of the Bollinger Band, which is a potential buy signal for the algorithms. We hit that oversold, and on the pivot point, we're tapping above the Bitcoin pivot, which was 80,000, which happened last night for me. So very, very similar setups happening everywhere. Now, the problem is it's not just a matter of sentiment, is we need actual laws to change. We need the hacking to stop. We need the SEC and companies, corporations, and the government to just kind of not attack crypto and to just support the market, support the price. I mean, I'm not asking for any like law changes to manipulate the market. Of course not. I'm just saying that managing the fear. We don't want to scare people to lose their minds, right? It's all about the charts. I just want to remind people for stocks and crypto, charts like technical analysis and indicators, it's only about 25% of the story in terms of my decision, the information. For stocks, yes, the chart is 25%. In my opinion, 50% is the fundamentals, meaning corporate earnings and news. 25% is government changes. And so that makes up the 100%, right? For crypto, it's more about like 50% sentiment and which way is everybody holding in terms of are we anticipating? 25% news and then 25% technicals. That's just a off the cuff general breakdown, right? So if everybody gets scared, it's going to crash. If everybody panic sells, and who do I mean by everybody? Miners. Remember, miners who have millions or possibly even billions, they're not going to hold their crypto down and lose. They're going to sell. And then aggressive shorts, when we lose the support level, are going to sell. People who are afraid are going to sell. Anybody who accidentally bought in the middle here, like even me, I had a little bit of sell because I need to get rid of that trade, one trade that went wrong, right? So, and then I opened up a new trade and it's right, and we're having a green week green weekend. So basically, for me, I just need to relax, right? When we start crashing, just be patient and wait for this type of hammer. It's not the bottom of the market, but crypto likes hammers. Right? You just need to notice that usually when we have a big hammer, there's at least a little bit of a bounce, like a couple days at least. So I'm looking for at least 2 days to maybe a 30 to 60 day bounce in the future. So our support level on Bitcoin is 82,000 to 80,000. Put down here, a resistance 87,000 to 90,000. However, it's downtrending technically, okay? So we are not going sideways. We are not going up. We're going down right now. I'm playing an oversold aggressive play. Ethereum, very similar. So Ethereum had the hack. Let's use a different chart. The KuCoin chart, and just clean it up. So basically, we're back to September 2024 lows. Not the greatest spot. Ethereum has not been doing as great as we think. This is the 2022 low to the 2024 high. We're in the 618 right now. In the 618 since pandemic lows, not COVID lows, but that last big dip we had after 60,000 of Ethereum, 1,000 Ethereum, 1,500. Now it's $2,000 Ethereum. It's not bad, not bad. In a larger term consolidation, we had resistance below 4,000, and now we're stuck between 2,000. So the midpoint is basically 3,000. Very simple numbers. So if Ethereum stops getting hacked to oblivion and there isn't that much bad news, there's a small chance actually that we could bounce long-term back up to 3,000, okay? Because what happened, this crash happened before last summer where Ethereum lost, I mean, the laws are different now and the president's different, but we had a 50%, 45% crash last year and we still survived. So it's possible for that to happen again. And this copy-paste setup in the box, that's what I'm visually seeing. I keep telling people about this because I keep seeing it. It's the same mentality. Is after taxes and after the laws change, maybe people have some funds and some confidence to come back into this market, but we need to hold the lows. What's the low? 2,100. 2,100. Is it extremely oversold? No, it's not. Okay, so basically, just use pivot points. And as long as we're holding above pivot points for support, we are okay. We're in the 618 right now. That's why I'm very, very watching closely. What I learned is watch my technical price levels on crypto. Don't listen to my emotions. If I fear, uncertainty, doubt, do my best to ignore that and be strong and have patience and discipline. And yes, I might have a few bad trades. And I'm just giving an example, but I need to catch the big trade. If there's a big bounce or law change, I need to catch that. So let's move faster. XRP. KuCoin. Okay. XRP has a head and shoulders on the chart. I'm just going to call it out now. This is a very large head and shoulders. The neckline is $2.05. Okay. And if that is going to happen, that could be a 60% crash on XRP, which take us back down to 80 cents. Nobody really wants that to happen. But if the law changes and something bad happens, we're in a downtrend. We have been downtrending before, but it needs to consolidate into a triangle. Right now, it's actually a real downtrend. So this hammer candle that's happening on XRP, it's basically intraday bounce right now. Watching very closely, we're below the support level and it's not quite oversold. And on intraday, it is oversold on a 4-hour, but still downtrending. So until there is some bullish momentum, which is why I'm entering not full position, but I'm waiting to see, are we going to dip? If we dip and hold, then I'll increase my position. But right now, I'm just starting to get inside XRP. Immediate resistance 221, support $2. See if we hold that for at least a week. Need the market to calm down for at least a week. All right. Solana, after the kind of scam fear, I'm going to call it, with pumped out fun and meme coins, the SEC did provide clarity on meme coins. So thank you for that. And Solana rejecting down below 260. 260. Now, where's our support level? Our big support level down here is 115. 115. So if we Fibonacci from September lows to January 25 highs, it's a full retrace back down to support levels. We have an older trend line. This is sometimes where technical analysis starts to get, almost mind-boggling. Is a previous level of resistance is now support 6 months, 4 months later. So Solana crashed all the way down to support. And the question is we've had some liquidity here in the past. Pull up a volume profile for 2024. This is the zone. This is the price that a lot of people try to defend. $120 to $100 Solana. $120 Solana. We just tapped that 130. So we can have a bounce. Lower low, lower highs. We could bounce up to 150, 175 if the sentiment is good, because that's the next target and that's the next pivot. So if we can hold above 130 on Solana, there might be hope for a bounce. But I'm still being cautious. Solana was the first to bounce. 15%. It was beautiful. Let's go to Doge. Let's do one more, because I keep seeing Doge in the news, and it might be related to the meme coins. News from the SEC. So Doge, if I look at this chart right now, is it going up? Is it going sideways, or is it going down? It's going down. Downtrend. Now, where's my levels? Take September 24 Fibonacci to December 24 close price. And we tried to defend the 618. We're still in the lower low, lower high pattern. Seeking out the lower low to establish that support level. I do like we're finally getting oversold in crypto. Algorithms and bots, they love that. Why? Because if we have one of the oversold price levels here, sometimes we get a bounce. It might not sustain itself always, but at least you get something to trade. So that's why for me, I'm trying to prepare for this bounce if it happens. If it fails, no worries. Try to get the bottom. Now, I do like all-time highs. Doge is 50% off from the high of 24, I should say, 2024. The all-time high, the mega high, back here closed was 70 cents. I still remember that. 75 cents. So that's why from that high, we're down 70%, 65%. So we're still in this game. Dogecoin's classified as a collectible. So basically, meme coins and possibly even crypto can be thought of as, actually, I shouldn't say crypto. Meme coins can be thought of as collectibles because that's what the SEC said. So it's more like a baseball trading card. It's like a Pokemon card. It's like a trading card that has value that changes every day and every year, right? So that's why. If the sentiment is bad and the collective sentiment, more than 100 people, the collective sentiment of the market goes down, then we have a sell-off, right? And there's this huge symmetrical triangle here. So if I take this September 24 low, the Fibonacci again, we are approaching the 786 level. What am I looking for though? I don't want to leave people hanging. If it's a falling knife on a daily candle or there's just one hammer, it might not be the bottom. We might have this action in the box like this. Okay, this is a very good lesson here, and we'll probably end with this. Is we have a lower high rejection and the price goes down. Last time in July summer, we had a bounce, lower high rejection, and then down. So what do I need to see? I need to see the price go sideways, turn into a triangle, consolidate sideways, and that might go up and down like this. It might turn into an uptrend. If it turns to uptrend, I'm back in, I'm back long. If the news is really bad, we have bad hacks, bad news, and we keep crashing, I'm out. I'll stop myself out of that trade. But I need to see a formation such as this upside down head and shoulders or a double bottom or uptrend reversal. So studying Dogecoin, this is a huge lesson for people, is understanding what's a downtrend, what's a consolidation, what's an uptrend on the price only. Just turn everything off. I don't need anything else. Turn off on the indicators. Doesn't matter to me. Dogecoin or Bitcoin or Tesla or Nvidia, whatever it is, right? That's basically the price trend for daily chart. Is it down, sideways, or up? I'm saying the price trend strategy. So one hammer candle might not be the bottom. I just want to keep repeating it to people and myself because somebody could have called this a God candle or a hammer candle, and it was not, right? We have to understand the news has a factor in this market. So I need to see double bottom, upside down head and shoulders, etc. Okay, I'm gonna end with a couple of bar replay. Let's bar replay Doge itself because let me use SHIB. Actually, let me use Doge because it's actually in US dollar cents, like 20 cents. SHIB is too small for people. The money doesn't make sense when you look at it with your eyes. So let's do a like 5 or 10 minute replay trading. So I'm in Dogecoin, trading view, free account, click replay trading, open it up. And then pick the spot. So I'm going to let's pick this high of 2024. That was kind of that first mania of Dogecoin US dollar. Now pop open a calculator. Right on the screen. Let's just pretend for practice. Let's say somebody has a large account, $1 million, right? $1 million of Doge is 20. How much is that? It's 4.5 million Doge coins. Let's go 5 million. This is like an insane example. Oh, there's a maximum million. Okay, we'll just do that. This is really interesting. 1 million Doge coins. Now, we know right now the average ATR is 2 cents. So that's about 12%. So I know probably I need to be comfortable in this coin risking 25%, which is a lot. I'm not saying capital. Okay. Actually, the correct example is only doing like, let's say like $1,000 or $10,000 quantity. So I want to really, I don't want to teach people bad position sizing. So let's pretend that somebody only has a $10,000 account and then risking 1% of that is what? Risking 1% of that is $100. So then what I could do is I can do $1,000 position and put a 10% stop loss, and that becomes $100. So let's do that. What's $1,000 risk worth? I can only buy basically 4,500 Dogecoins because I'm doing 10% risk, and then the position size is mentally $1,000 and the stop loss will be 10%. So I'm only risking $100. This is probably the correct position sizing, I would say, for most people, beginners, even to intermediate. So now let's play the chart. So this is already, it's a little bit too high for me. High, low, high, low. I know this. I could feel it just on the charts. It's a higher high, right? I want to buy on a dip at least. So let's do that. I'm not going to trade too much, right? There's a dip. We're approaching the support on the left side of 13 cents. See if we keep crashing. We do. Okay, we had that bounce. Let's pretend I missed it. I do see a head and shoulders on the chart. Just pretend to be conservative. Wait for a really low bottom. Okay, what I like here is head and shoulders, downtrend. We're kind of like right here in real life, but I like this potential upside down head and shoulders. I'm willing to risk $100 on that. So buy here. Stop loss at the just above the $100 range because there's some slippage. So like $95, let's say 97. Take profit at $150. So I'm trying to get like 1.5 ratio. So I'm long. There, is it going to sustain? It might crash on me. It's going sideways. Starting to downtrend. Okay, so we almost had that. The 20% target was too large. This is an example of a real example. Perfect example, because if I miss that bottom support and then I come in a little too late, even with proper risk management, the target is too far, right? It was 20% from the bottom of this, 25% from this spot, the bottom support to this spot, and then I would have made money on the trade. But because I came too late, it's a good example that maybe I need to shrink my risk reward and understand that we're not going to go the full 25% just because I say so. It might have only went 1 cent from 2 cents from my level, which is technically only 10%, not 20%. So it's a good lesson example, very real world example of what really happens. Now I'm going to use no indicators. I like that we're coming towards support level. It's below the support level now. Okay. I'm just going to use trend lines so I can draw at least something for people. We're below that line. So if we see reject down, we're going to short. Yep. Okay. There it is. So another hammer candle. I'm getting ready to maybe potentially open a position. Might have missed the entry. Next pullback. Okay. Even if I miss this, it's okay, right? I'm no FOMO charts, I know. If I miss this bottom, and I miss it a lot on bar replay because I'm doing triple speed, which is okay. I'm trying to mimic real life. So if this pulls back on me, maybe 10 cents, I might enter there. I do not really want to buy this breakout because it's too high for me. Pull back. We're going to keep dumping. Oh, there it is. There it is. Okay, so now it came back to my level, just a bit lower, and I'm going to try to enter here. But because it's 10 cents, the position sizing changes, but I'll just leave it at a flat 5,000 for now. Dogecoins, buy. Stop loss at 100. And I might try to target 200 now because I feel just on experience that because we're such in a downtrend, it could bounce stronger. Like I'm trying to catch the bottom. I'm not chasing the top of this. I'm trying to catch a bottom here. If I get stopped out, no worries. The first bounce. Second bounce. Will it sustain? Commit to stop loss. Don't get scared. Almost hit it. So, you know, sometimes you get those kind of hiccups where it's like, oh, it's so close to my profit target. So maybe 1.5, $150 was probably the better target, but no FOMO charts. So just keep going. Don't listen to my emotions. Leave the trade alone. Hands off now. There we go. Finally, second time hit. Okay. And we had a net profit. Okay. So just an example, just one trade, having patience, correct position sizing. Don't keep flip-flopping, right? In terms of this is down, but is it hitting my stop loss? No, stay in the trade. Stay in the trade. Now I want to do one more trade. That's just like 2 trades. That's 50% win rate. So I want to keep going here. Now, if it pulls back, if it happens to pull back, I want to draw more trend lines. So we had a breakout of the trend line, trend change right before our very eyes. So then we draw new trend lines. This symmetrical triangle. We also have possibly this triangle that's setting up. So keep going. And we could see, okay, there we go. Whoa, 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 whoa. Whoa, whoa. Right? So again, in real life, I would have entered that trade. But, you know, sometimes triple speed bar replay is too fast. So let's go single speed. I don't want to miss that. So let's say, pretend I sold right there. And sometimes one-time speed is better for practice. Because what's happening? We're pulling back, but we're in the uptrend, right? We're in the uptrend. So breakout. Okay, I'm not going to FOMO at this spot yet. Are we going to get a pullback retest? And then we're going to bounce. Hammer candle, bounce. Is it going to bounce? I'm long. Simple as that, right? I could have played the hammer, but I'm trying to show people a little more conservative. Wait for a little bit of confirmation. So let's buy 5,000 more Dogecoins here. Stop loss. Same thing. Stop loss. And then same thing. Take profit. There. We're in the trade. Wow. Next candle had a win. Next candle. Now, if we're starting to go parabolic, because I mean, hint, hint, we know Dogecoin goes up. Sometimes I don't have a take profit on the top side. So here's an example of what can happen if let's say we had a little help from the indicator that we know we have a golden cross and we have a setup. This is kind of too far for me, but what I would do if I was forced to trade this is I would reduce my position size, let's say half, increase my stop loss times 2, and then not make the take profit so close, like put it way farther up here, or do a mental take profit. So then we can buy. In this example, stop loss way down here. So it's still $100 loss. Does that make sense? I cut in half, but I doubled the stop loss. And take profit, don't put one. And then just go. Let's go triple speed to end the class. And once it gets way up here, then move my stop loss up to, let's say I want to lock in at least $400. So I made 4-to-1 on this trade. Let go here and then let the market, it doesn't have to be that close. This is like more like day trading, swing trading, trade management. Click it. If it crashes on me, right, it should have been a trailing. Stop on certain exchanges. But this is starting to look like it's going to fall down because you have a higher low and then probably the RSI is dipping. So we could crash soon. So I'm getting ready to get out of Dogecoin. Let's say I'm going to lock in 450. Keeps going. I'm going to move it up to like the next candle because it's getting very high, 550. And then next candle, I'm out. So we made 7-to-1. Let's just open the performance report and just see the actual ratio here. The list of trades, we did 3 trades that were logged down here. And so, okay, this is not actually correct. So basically from memory, we did about 4 trades this last one. So probably we had, you know, like 1.5 to 1.7 profit loss ratio. And this last trade was the big one that gave us that basically like 4-to-1, 3-to-1 win, right? So this is just being patient because right now in crypto, we're like on this side and then fast forward to the very end. Look how much it crashed, right? So if somebody bought here and did buy and hold and closed their eyes, they made 0. It's not good. Have to lock in the profit somewhere when it goes really, really high for swing trading, right? So this number 750 is actually a significant number. It might not be a lot of money to people's minds, but that's 700% or 300 to 400% profit, right? When you actually look at how much this went, it went 100%, but how much do we risk? We risked like 1, 2, 300, and then we made, you know, double that, 750. So it's just, the system can work if somebody has really good trade management discipline, right? Did I overtrade? No. Did I trade 100 times in here? No. I did 4 trades. 4 trades, and that's my style. And most recently, I opened up a long right here just to see what's going to happen here, right? All right, everybody. Thank you so much for watching this really long video. I hope you enjoyed this video. Click subscribe, click the like button, leave a nice comment or request, and I hope you learned something. Remember, risk management, position size and control, emotional management, and if somebody's having trouble in the market, you know, consider switching to paper trading, bar replay, or just stopping, taking a break, because, you know, trying to constantly go long when it's crashing can be brutal in terms of losses. So hang in there, everybody. We'll get through this, and I'll see you in the next video.